Welcome to Car Wash M&A, the podcast, brought to you by Amplify Car Wash Advisors, the #1 advisors of car wash chains nationwide on mergers and acquisitions and capital advisory services.
Hi, I'm Lanese Barnett, Senior Vice President of Business Development at Amplify Car Wash Advisors, and your host of Car Wash M&A, the podcast. Here, we'll take a deep dive into the current mergers and acquisitions activity in the car wash industry, with the goal of keeping car wash owners informed on where the market is today and where it's going tomorrow, so that you can make informed decisions about your business. We'll answer the question, should I sell my car wash now, or should I enter growth mode and really scale my operation? Each month, hear from industry experts who will show practical advice on how to sell or scale your car wash. While the industry is undoubtedly changing, what remains constant is the need for solid information so that you can make informed decisions about your business. Welcome, everyone, to episode 12 of Car Wash M&A, the podcast. Today, I have with me Paul Sigfusson. He is new to our team at Amplify, and we're really excited to have him here today because he diversifies the experience and the background that we have on the Amplify team. And I'll let him share a little bit more about what his background is. But I'm super excited to have this first official episode of the new year as we start 2023 and look forward to all of the amazing conversations that we will have. So welcome, Paul. Thank you for being on the show today. If you could just give our listeners a little bit about your background and where you're coming from.
Yeah, thanks for having me. I think I've been a serial consumptor of podcasts over time. So this is the first real donator back to the ecosystem that is podcasting. I'm a huge fan. So thanks for having me on, and look forward to sharing a bit about me and where the Amplify platform's going. So yeah, just a bit about my background. I started my career in investment banking at Deutsche Bank, right at actually the start of the global financial crisis. So an interesting time.
No kidding.
As banks were consolidating, liquidating, it was a stressful time for the industry, but really a great learning platform. And I was super grateful to individuals and clients that I had a chance to work with and alongside, and was able to capture really a great base understanding coming out of undergrad around the global financial markets, including the global capital markets, M&A advisory, debt equity, structuring and placement. And it was just a really great, initial job coming out of school, and forever grateful to the platform that it provided. So after 3 years at Deutsche Bank, I transitioned to KKR, which was a global alternative investment firm, and spent the last really 11 plus years there in two primary roles. The first in New York was focused on capital markets and capital structure advisory. And sort of simply put, we were really an internal team that was focused on providing highly aligned and tailored advice to our global portfolio of investments across public and private debt and equity securities. And we thought about ourselves in that role really as the nucleus of the firm. We saw everything that went and was a part of most transactions that the KKR was involved in globally, which was a great seat and a great place to, again, continue to further my understanding of the capital markets and in depth in that area. But if folks aren't familiar with the private equity transaction, it typically consists of a small portion of debt and a small portion or a big portion of equity funding that's used to buy a controlling interest in the business. And both of those components are very interesting and very important for those transactions. And so as I thought about the time spent in the capital markets and advisory, area, we were really a very internally focused, aligned group, finding the best possible capital funding sources for our investment teams globally. And it was, again, a great place to learn about the capital markets, and obviously a place that I again met some great people and really have furthered my career. And then in 2015-16 time period, I moved to the West Coast and I transitioned into the consumer private equity team, really focused on making investments in North America, but connected globally. And as we
And give us
thought,
an idea of like some of those, some of the businesses and industries that would be included in that.
yeah, sure. So really, we thought about ourselves covering three primary verticals: products, consumer services, and in e-commerce. So those were the three places. And I'd been interested in retail and in the American consumer. I mean, I think about that as the lifeblood of our economy. And I had amazing opportunities to invest time and resource and energy behind great investments, like National Vision, a public optical retailer, Academy Sports and Outdoors, 1-800 Contacts, are a few examples of investments that I was a part of and a part of making and executing behind. But more importantly, I got to know and hear and see great leadership teams over time. And so this was a great opportunity really to understand that advisory role, understand the investment life cycle from making the investment through the value creation initiatives that go a part of it, all the way through to ultimately exiting and monetizing these. And really in this role, over the past couple of years, I got hyper focused around the auto services landscape, which is where I was really introduced and got to know a little bit about the car wash industry.
And so that brings to our next question of how did car washing become the key focus of that as you're, exploring the automotive industry and you're diving in deeper? And then how did you get connected with our team at Amplify to come over here and join us?
Yeah, I'm super excited. I mean, it's a great team, and I
Well, thank
feel
you.
very fortunate in my career to have had incredible mentors who invested an enormous amount of time behind me. And of course, I've always thought about my career as a two-way street. So, while feel like I've worked hard in various roles I've had, I've always felt like I was rewarded for that hard work by the time and folks that invested behind me. And I see that opportunity here. Really, if I can sort of outline three things that I loved about my time and enjoyed at KKR, I would say the first is the founding principles of what we did was you do business with people you like and trust. This was instilled from the top, from the founders of that organization, and I feel like we lived by that every day. And always doing right for the client is always going to be the right outcome. And what Jeff and Bill and team have built, is built on that principle. And so I see a lot of that. The second would be this entrepreneurial edge. If you're not continuing to innovate, if you're not continuing to sort of grow your career or grow your capability set, you're going to sit back and get left behind. And I see that entrepreneurial edge in this organization. It's a small, nimble organization. And the last would be really a deep and experienced team. And while, it's not a global organization like KKR, and it doesn't have the depth of resources and capabilities across industries, it does have something of significance in the car washing space, which is real deep understanding, a long tenured of operations, multiple decades across the operations of a business, technology capabilities of the business, and of course the advisory aspects of these businesses. And so these are things that in principles that I feel like are very strong tenets of a really healthy and strong organization. And I'm super excited to continue to grow that capability and build upon what's already sort of existed here at Amplify.
Well, thank you for sharing that, Paul. And, we met just a short time ago, but when we did, I felt very comfortable around you, and you have a lot of the same like-minded thoughts that we do value as an organization and as individuals as a part of this larger organization. And two things that you just said that I found really interesting. One is talking about the consumer services being, kind of the lifeblood. And there's something that really strikes me about that, because how people behave and how they consume products and services really gives an insight into people and their daily habits and what they value and how they prioritize their day and their money. So one, I find that super interesting. And two, looking at the the work aspect of it, and why you joined Amplify in particular, is the relationship value, and that, we do, doing business with people that you respect and that you want to do business with, like you said, was a guiding practice at KKR. Totally is something that we identify with. Is, we want to have these long-term relationships where we're bringing value to them, and we're, it's that two-way street even amongst our clients as well, that they can trust us and that we also trust the relationship back. So I just love those two things that you
Absolutely.
said. So thanks for sharing.
Yeah, absolutely.
So as we've kind of talked about your transition into the car wash space in particular, what are some things that you're excited about learning more about in the car wash industry, or that is giving you just fueling that interest further about kind of what's going and how it's evolving as we head into 2023 and beyond?
Yeah, maybe I'd just start by saying, similar to the reasons why I joined Amplify, it's all about the people. I continue to be impressed by the individuals that I've met over time in this space. And as the industry grows, that network will only get better. Um, you know, in my approach to the space is largely driven by an investor's perspective. And so I will be a bit biased in that. I've never really been an operator in my career. I've been a banker, a capital markets advisory specialist, and an investor. And those are different aspects of the value creation model behind car washing, but they're different than the core operations. And so I look forward to sort of learning more about that. But, given the perspective and the pattern recognition that you see in evaluation of investment opportunities, not only in the car wash space, but across the consumer services landscape, it kind of forms a point of view. And from that perspective, the world continues to rapidly evolve and change. And of course, that's also the case in the car wash business. And so, as a consumer first business, consumers are winning through choice and new services. And that's an exciting aspect of where the car wash business is going. And in addition, technology, I feel, and from my perspective, is still in the early innings of its evolution in the space. And so
Totally.
this digital first experience a consumer touches and feels, the operational improvement through digital implementation tools that support decision making in the business. There's always a balance with technology, of course, but there's some exciting tools that are being used in and outside the industry that will continue to drive consumer behavior, retention, in the way that the ultimate decision maker, that consumer, sort of behaves in this segment.
Right. And of course, as operators, which is, who our show is geared towards, especially knowing what tools and resources they have available to them to strengthen their businesses and make sure that if they are looking to fund growth, if they are looking to make an exit at some point, that they're really protecting the value of their business and also protecting and increasing their cash flow now, so that they're making money today, but they're also protecting that value in the long run.
Absolutely.
So
Absolutely.
let's talk a little bit about that, and then what your perspective from a investor, from an investment banker, what does the economic uncertainty that we currently have and that we have for the foreseeable future, what does that mean for operators, and what can they be thinking about to protect their businesses or to strengthen them even?
Yeah, yeah. I think it's probably helpful, Lanese, to just kind of level set a little bit in terms of, what's happened over the last couple of years. And I viewed that time as more of an aberration, and we're now entering a period of normalization. We were living in a very distorted time period over the past couple of years. And I can probably just shed two examples in terms of, how I think about some of the macro environment and what's been happening, and then how that can shape some of the future thinking around it. I'm not a macroeconomist. I can't predict the future, and I don't think any of us should try. But we can control what we can control. And so the first, real change over the past 12 months is cost of capital. And, I, as an investor, was very focused on one singular primary metric when we evaluated investment opportunities. That was return on invested capital. And a simple way to just kind of frame, what's happened in the industry is the payback period of making a capital investment in this space. And so, we can put some dummy numbers around this just to paint the illustration, but it's really going to sort of change behavior longer term, which is, as the Federal Reserve increased interest rates and the cost of debt financing sort of materially increased over the past 12 months. And we've seen some inflation in building costs. You went from 2020, 2021, or even before that, building costs may have been slightly lower, and your interest costs were nearly zero as a base rate cost of capital, on top of some credit spread that a bank would issue. And as you think about the translation into cost of capital and the impact of making a return, you used to get paid back for making an investment in the car wash space in 2 to 3 years, under some normalized scenarios, and they can vary greatly. But if you include a 50 to 100% increase in cost of interest rates of financing that car wash, as well as continuing to sort of double down on the operations, that cost of capital and that return on investment is getting close to double where it was, prior to the past 12 months and what we've seen. And so, what that's going to force in this industry, and I think it's a healthy thing, again, back to this period of normalization, it's going to force investors as well as sort of operators to just make sure they're thinking twice about capital deployment. Is this a productive, form of capital deployment in the space? These are capital intensive units. And I think that's a very healthy part about the industry. It won't be growth for the sake of growth. We talked about cash flow, and that's an important piece. The other is valuation, and obviously there's various different ways to think about valuation, but let's just take, for example, the one public comp in the space that's out there, pure play public comp. And if you take the valuation from the first half to the second half, for each 100 basis points of Federal Reserve increase, and we went from 0 to 4.5 today, and probably going up even more, that's really reflected a pretty material decline in valuation to the tune of high single digits per 100 basis points. So that's been a material impact on both capital availability, return on investment, and valuation. And that's distorted. So that's just a level set, as we've seen the economic conditions change over the past few years. But then as we think about forward looking, how can an operator think about preparing? I love the way that Jeff at Amplify thinks about this and talks about Car Wash 2.0. Focus on what you can control in the operations of the business and start to scenario plan. I can't be the one to predict the environment going. I can't tell you we're going to have a prolonged consumer uncertainty or contracting spending behavior environment, or maybe it's the opposite. How do you plan for an alternative and a more resilient consumer? But, what you can do is plan for multiple different scenarios, understand, how your business is going to behave from a analytics perspective in any of those different, scenarios, and then focus on the data you have access to. There's all sorts of different quotes that I love to sort of delve down into, but, what gets measured gets managed is a great one. In these environments, it's really important to double down into the data that you have access to and how you can sort of manage your business better. And then, lastly, just in terms of, scenario planning and starting to think about the future, it's always been difficult in a rising tide environment. So the environment where everybody's being lifted by low interest rates, the conditions are pretty benign. It's very difficult to differentiate your brand in that environment. And I think about the conditions and a more uncertain conditions as an opportunity. And this is to double down on yourself, your operations, your people, and how to go out execute for the consumer and at the expense of your competition. All those things will add up into helping, prepare operators for the uncertainty that sort of in front of us, which no one can really sort of paint out in a clear picture.
And you were talking about some of the different scenarios that they can prepare for. Can you give us an example of what types of scenarios those might be?
Yeah. So it's it's sort of thinking through, your existing P&L, understanding what a smaller growth rate than maybe what you experienced last year might do to your P&L. How do you more aggressively manage some of the costs in your profit and loss statement? How do you understand the different variables that can assess what happens if you have 100 basis points of attrition versus 100 basis points of increase in your membership retention? What do these variables do in your business, and how do you offset those to continue to sort of manage your cash flow through these time periods? Cash is king, and the fundamentals of this business allow for a very profitable unit economic to sort of come through. And if you can manage those variables and prepare for the different variables that can come through, then you can effectively manage through the downturn and get to the other side on a better and stronger footing.
Yeah, absolutely. All the work that the operators are putting in and pouring back into their business to make it stronger today, to be leaner, to be more efficient, that it is helpful today, but it also drastically pays off in the future by protecting that value and by having that already established as they move forward, especially as we enter different periods where maybe it's easier to fund growth, or you can start growing again at a faster rate, that you have the foundation in place. So for car wash operators and owners that are still interested in taking maybe a conservative growth strategy, what are some of their opportunities to fund that growth today or in the foreseeable future, and what options do they have?
Yeah. I think it's still a really interesting time in the space, and I think as things have normalized, I think it could be even more interesting. I think about capital deployment in 23 as being potentially one of the better times to deploy capital as a capital allocator going forward, and so I think it's still a very interesting time.
Why do you think that?
Yeah, look, I mean, I think you've seen a big reset in valuations. If you deployed capital over the last couple of years, it was at a different valuation than potentially what it is today. Despite the macro uncertainty, it has very strong underpins to its business model, which are economically resilient over time and have proven that. I think if you think about going back to the global financial crisis, this industry, based on various different sources, have declined, maybe low single digits. And, the creation and implementation of a membership base today is certainly more helpful than what the structure was during that time. And as well as consumer adoption, there's more awareness from the consumer's perspective around what a car wash can really offer. And I think those things make their earnings certainly more resilient, and the earnings base more resilient than it has been in the past.
Yeah, absolutely. What are some of the capital options that car wash operators have, or what can help them fuel and fund their growth?
Yeah, I think it's helpful again to start maybe at the macro level, which is to say there are portions of the capital markets that are very unhealthy today. And that's really driven by the incredible dislocation that's been caused over the last 12 months with interest rates rising. In the changes, these markets tend to thrive on predictability and some degree of stability. And that hasn't been the case over the past, 12 months or so. And so, that all being said, there are pockets and there are broader support and there is growth in this industry that is continuing. If you took on a relative value, a debt, let's just take a private debt lending pool of capital that has a diversified allocation to industries, healthcare, consumer, industrial, car washes on a relative value basis would be a strong performer in that portfolio today, driven by the continued resilience of these business models. And that's a very healthy thing for the broader capital markets and attracting additional capital. So you still have access, and there is still a well-functioning bank lending market at the commercial bank, at the hyper local level. There is plenty of direct lending debt capital. There are creative minority equity partners. There is still a functioning real estate market. All of these still exist today and are continuing to sort of build support and continuing to have more and more interest in them. I think in this market and in more challenging, sort of more uncertain times, it takes more creativity between the operator and the financing partner to come up with the appropriate solution that's right for that operator. But there is plenty of capital out there for people to find solutions for growth, and I think people should be excited about the growing interest in this space.
It is amazing how I don't know the exact timeline on it, but the interest and the interest level, even from a like an operator level, that when you would say I worked at a car wash, people would be kind of scoffing or, what do you do there? And now it's more, how do I get in? And so that's been a really interesting part of my car wash journey, is just the perception outwardly in general. And then also, of course, on the institutional investment level, that this has garnered so much attention because of the various attributes that you mentioned about its resiliency and the all the different things that make it attractive. But that's been a neat part of the last probably 10 years, especially.
Yeah, I don't think you can say anything to the contrary that the support system around pools of capital in the car wash space are growing and will continue to grow.
Well, that's good news. So we'll take it.
Yeah.
And then let's talk about that a little bit as compared to other consumer industries in particular that maybe you have some experience with, of why that is so.
Yeah, again, maybe I would, and this is obviously a space in terms of other services sectors that I've evaluated as an investor. And so I would, again, come at it from the investor's perspective. And I start when I think about the different consumer services options, and just to name a few sectors so people can have a good understanding of other services sectors. There's healthcare services. I would include optical, veterinarian, pet, in that category. There's home services as an example. So HVAC, plumbing, electrical, lawn, pest. And then of course, auto services. And that's a whole ecosystem in itself outside of just car washes, like tires,
collision centers and
oil, collision, maintenance, all those type of different sectors. And so, I come at it from the perspective of a various different, ways in which services touch the consumer. And from an investor's perspective, I start by thinking about the disruptive trends in those spaces. And there are plenty of disruptive trends across these consumer services verticals. It's been a perpetual topic of discussion around, how Amazonable is your business model for the last 20 years. I mean, just think about the bookstore and the classic example of how dislocated and disruptive Amazon was for that business.
right.
And when you do that, the long-term position of the car wash space is very attractive. And it's not the cheapest in terms of capital investment or build versus buy, but it has a durable long-term earnings profile that's very interesting across those consumer services sectors that I think is where I zeroed in on. And when you zero on specifically into the auto services space, and you think about some of the electrification trends and the electronic implementation in cars and the future mobility, I mean, these are mega trends that exist in the space, and we don't need to dive into having an opinion one way or the other, but those trends have varying different impacts on the ecosystem and in the services world, and in particularly auto world. And car wash has a lot of defensibilities against some of these characteristics as I think about disruptive themes here. And so, it continues to be a place where consumers, enjoy. It's a consumer service that puts a smile on somebody's face. I think you hear a lot of operators talk about that. I love hearing that. And ultimately, it provides a consumer convenience and value proposition that is really interesting and really, really valuable to somebody over time.
Right. And something that comes up a lot, maybe a little less so now, but it's still relevant, is the idea of saturation in this market or in various regions. And it's something that I had a great conversation with Jeff about a while back, about using Phoenix as a case study that has more large car wash chains per capita. I don't know the exact statistics there, but let's just argue that there's plenty there, but that they're successful, and that the broader consumer trend of adoption of professional car wash services, particularly express car wash services, that it doesn't show any signs, even in a weaker consumer environment, that it's still something that they find value in. And hopefully as an industry, we can lean into that, and that spurs us to provide better services and make that a stronger connection and relationship with consumers, that, this is the last thing that they're going to cut, or one of the last things that they're going to cut when they're tightening their spending, that maybe they don't go to Starbucks that day, but they do still get, their car wash or keep their membership, because it is such a great value, and it has the, the feel good, component of it. And, so I think that that's a really interesting part of the car wash industry that continues to, I think, be really important on how we relate to the consumer directly as the car wash industry, that you have these interaction points, that you have these habits and these relationships that form that make it really sticky.
Absolutely. Absolutely.
Bonus question.
Mm-hmm.
What has surprised you most about the car wash industry through not just joining here, but like through your keeping eyes on it over the last several years and getting exposed to it? And then, so what has surprised you most?
Yeah, I think probably the biggest surprise to the upside, I think, which I commented on earlier, would be the people. I've so much enjoyed spending time and getting to know people in this sector, and again, goes back to the principles of why I joined Amplify and what I enjoyed so much about my time at KKR. And it's really about the people. The people are the lifeblood of this business, all the way to the labor pool. And when I ever visit a car wash or evaluate a car wash, I love spending time with the operators at the field level, not the senior management sitting in their ivory tower. I wanted to go see the people that were on the ground operating the car wash, and then touch the consumer, seeing the smile on the consumer's face. That provides a smile to my face. When you're winning that consumer and giving that consumer what they want across their experience, convenience, and that, importantly, that value threshold, that's a really important aspect of winning that consumer every day.
The consumer is so varied, because you could have a store that has just the most wide range of socioeconomic backgrounds, of so many different factors, but they're all coming to this place because they find the same value created by the service. And that was always something in an operations side of being at some of our stores in my past role, that you could see literally like a guy with a Bentley or a lady with a Bentley that's, out for a little joyride, and then a car that it seems so pointless to wash because the clear coat's gone. But it's still the same amount of pride and value that's valuable to them. And I think that that's very endearing, and it is something too that I love about the car wash industry.
There's something about picking your kids up from soccer practice or school or baseball practice with a clean car.
Yes, everything is better. If I have a dirty car, which is pretty rare, I want to roll down the window at a stoplight and say, I usually have a clean car.
That's a miracle with young kids. It's usually crusted Cheerios.
So this is how we solve that problem in my household, is that whoever does not have the kids takes one car, whoever has the kids take the other. So they're dedicated. It's like a family car and a non-family car. So that's how. So one car's clean, the other car's trashed.
We're a free-for-all.
I used to fight it, but now it's kind of nice. So well, anyways, Paul, thank you so much for sharing your perspective from your investment banking experience, and from what you are looking to, continue exploring through the car wash industry, and the value that you bring to us as a team. And we're really excited to have you, and excited to get you more exposed to drying off cars, and maybe we can even arrange for you to go clean a tunnel pit somewhere. If you really want to get your hands dirty, I'm sure I could make that happen for you.
That's one thing I haven't done yet.
There's a first for all. So thank you again. And we look forward to just this year ahead and embracing the new opportunities, even though they may be different than last year. It doesn't mean that it's all bad. We just have to look at things on every level, both of the car wash industry and any business, being smart and efficient about how you build your infrastructure and how you build out your team and your operations, and then what that looks like going forward. So thank you. And for our listeners, you can catch our episodes the last Thursday of every month. If you have not signed up for our newsletter, I would encourage you to check that out. You can find it at amplifywash.com/news. And then, so be on the lookout for that. We send it out in tandem with the release of the podcast each month, and then throwing in a little bit other information in there. Thanks so much. Bye.
Thank you for joining us on this episode of Car Wash M&A, the podcast, with your host, Lanese Barnett. Like what you hear? Subscribe to our podcast feed and leave us a review, or follow us on social media at Amplify Car Wash Advisors. Want more M&A information? Visit our website at amplifywash.com and listen for new episodes on the last Thursday of each month.